interesting. If I had gone back a year and said everything that's going to take place, I would have said that gold will really take off if all these things take place, and they all took place.
Definitely does take a long time to correct. And I think one of the things that we've talked about before also are other ways to reduce risk and I guess safe haven assets that are out there. But they often also fall, as you mentioned, when we do see these sell-offs. Last time we talked about gold and silver, and they have fallen since the last time we talked, especially silver. Your take on those at the moment, where it seems like this environment of inflation should be fantastic for the precious metals, but we are seeing them fall along with the stock market.
Elijah, it's interesting. If I had gone back a year and said everything that's going to take place, I would have said that gold will really take off if all these things take place, and they all took place. And we own gold, by the way, so don't get me wrong. But it didn't happen, and I don't know if it didn't happen because at the time, a year ago or 2 years ago, they were getting maybe some competition from crypto. I don't know. Couldn't tell really. But I will say this. I thought back in the spring when I talked to you that when the markets go down, the miners go. We like the miners, but we took some of them out back because we felt like they follow the market down, but they don't stay long. You look at, I'll give you 2008 as an example. Gold came down, the miners came down, but by the time you got into May or June of '09, you were back running again. It's sort of like that now. Probably you're seeing these miners really get sold down right now. But for the first time in my career, there's probably 5 or 6 of them that are yielding anywhere between 4 and 5% on the dividend. So I think people will start to look at that, number one, on the miners. But they come down because people turn around and say, yeah, I need liquidity, so I'm going to sell anything that's sellable. And that's really where we are today. They're selling anything that's sellable. Unfortunately, the gold miners are there. I think the bullion is better right now to own because you won't, even though I know it's down the last 4 days, but it's a better item to own than the miners because people for some reason don't sell the bullion as quickly as they do the stocks. That's just the way it is. But if I were just coming into it, we'd certainly, if we get new money today, we're in particularly one strategy we have, the high income strategy, we're going to own 3 or 4% gold.
And what has to turn around for that trend to shift? We're talking about how, all of this gets sold when the general equities get sold, but what actually changes the trend for precious metals towards the upside?
Well, my personal opinion is what will change it is twofold. I think crypto will go lower. Maybe the top 5 don't get hit as hard, but the other 9,900 or whatever, they just get obliterated before it's all over with because there's nothing to them anyway. But secondly, in my opinion now, it's just personal opinion, so I'm not trying to tell anybody you need to think that. But the second thing is that when people get worried enough, and they're not worried enough yet, that's what I'm saying about the stock market. When they get worried enough, they'll turn to gold because gold becomes what I could call a fear investment. And they get really fearful and they'll own some gold. And we're not there. I think that's 2 quarters out or something, but it should get there.
And your outlook for gold is quite positive for the long term. I know you've said $5,000 gold, correct me if I'm wrong, but why do you see it going that high?
Well, number one, it's hard to find as much as we used to find. And secondly, we watch these periods. If you look at 2011, that was the high. And then you'll go through 7 years or so of correcting and all that sort of thing. But they go in these cycles. And we really have not had a great up cycle yet. Yes, it's higher than it was at the low back in 15 or 16, but not tons. And so what you should get somewhere is some pricing in the next, to me, at least in the next 5 years, it would be somewhere between, maybe 3,000, maybe 5,000, but some number that's probably double at least what it is now. That'd be 3,400. But I would guess that you'll get that because I think the fear will come back in.
And then your perspective on silver, are you more bullish on gold or silver at the moment?
Well, Elijah, we don't own silver. I always look at silver as a little bit more of an industrial metal. It does have tendencies like gold, don't get me wrong. And the silver gold ratio right now is obviously skewed in favor of silver if you're looking for the cheaper. But if you look at it, silver is used a lot industrial as well, and gold is to a degree, but not like silver. And so, yeah, it's an okay. We don't own it, but I don't see a problem with it. I'll put it that way.
Is your anticipation at all that it'll get hit as we continue further into this recession and economic downturn?
Yeah, I would think so. At the worst, or the best, I would say it wouldn't go up a lot. I mean, it doesn't have the following that gold has, but it has its place in time. I don't know that it would be something I would own the next 6 months, but it certainly, when you turn the corner and start back the other way, silver will be something to own.
All right. Well, Ted Oakley, we really appreciate your time today. If you could share with our viewers kind of your macro view again, highlighting really what investors should be looking at right now.
Well, Elijah, I think what people have to understand is that, and let me say this, there's a lot of people in this business that have only been around for the last 12 years or so, 10 or 12 years. And unfortunately for them, there's two things they've never seen before. They've never seen inflation, and they've never seen a longer extended bear market. Yes, they got a bear market for about a month or 40 days in March of 20, but you have to realize how many people are in that slot. And so they've all been taught, this is the mantra they've been taught, which is just buy it and hold it and put it back and you'll be okay in 5, 10, 20 years. Well, the problem with that is when you go through, and this is why their inexperience will kill them. When you get into a situation where in an extended bear market and you get down 50% or 55% and it's over, then you've got to wait the entire time. You've got to go up 100% just to get back where you were. Most people do not have the fortitude to do that. Once they are starting to get wiped out, they turn. So my advice to people from a macro standpoint right now, and I don't think you'll lose a lot by doing this, is to increase your liquidity higher than you normally would have it. Don't do anything with it. You can buy a 1-year treasury or 6 months treasury, but don't do a lot with it. In other words, that needs to be iced. And then give yourself some leeway, because eventually we will have a really serious low that is a great opportunity to buy things. But you got to have cash when that happens. And so I always tell everybody that, you don't need cash till you need it. And so when you really get to a point where you need it and you've got some of it, say half your account's cash, you'll be surprised at how quickly you can make up the ground you lost over the next 2 or 3 years after that. But that's where we are right now. I think it's a classic bear market. I think most people don't realize that because they're too young. And I'm not knocking youth, don't get me wrong, but there's an experience side of it that you got to see this coming. And I think that's where we are. That's my advice to people now.